Hey guys, Mike here. So obviously we have a tropical storm, hurricane, whatever it's going to be tomorrow morning hitting my area. So can't film outside and no reason to see my ugly mug anyway. But I definitely wanted to put this video out here because a lot of things have happened in the last 48 to 72 hours. And so I want to go into that with you to make sure we understand what in the world is happening. And a couple things are happening. I mean, obviously futures are selling down right now as I'm recording this for a reason. And one big one, and then we'll go into the second big one, is this thing called the SOM rule, right? And people kind of freak out about this because it does have 100% accuracy. And you can see right here starting us off, and I'm going to let you hear from the person who actually invented the SOM rule and what she has to say, because there's two parts of this story you need to get a hold of. And a lot of people are reporting half the story, and that's all they're reporting. But here I'm going to give you the whole story. And you can see when it triggers, you can see the shortest was 1 month later, we were in a recession. Highest was 8 months. So what do you think? On average, 4 to 5 maybe is a fair rule to go by here. So that kind of freaks people out, and that's why you're seeing recession pop up everywhere, all over Twitter, Instagram, you name it, okay? Now, understand, I'm going to show you two interviews. One is, obviously, she's going to talk about it triggering and kind of what that means and why, or what the SOM rule is. And then we're going to go into something even more important, which is the second part of the story, so pay close attention to this.
Sam, I've got to ask the media question, is the SOM rule in force at this moment?
It triggered. Yeah.
Wow.
Yeah, so that puts it up over its 0.5 percentage point threshold, noting that comes off of historical experience. That doesn't necessarily tell us where, we are right at this moment, saying a recession. This has seen way too much momentum in the unemployment rate in recent months. I mean, 4.3%. Right? This is not, so whether we are at that moment of a recession or not, this is your build into substantial weakening in the labor market. So the labor supply, both the immigration that we have now that's pushing up the labor supply and at least temporarily, or at this time pushing up the unemployment rate, that is causing the unemployment rate to be higher. I think the labor shortages previously had pushed down the unemployment rate. Notably, right, not sustainably. So, the SOM rule is all about these changes. So I think there's my take of where it's at with the increased unemployment rate is it's probably overstating the recessionary dynamics. So we've got these supply dynamics that are it's a whole other topic. And yet under the hood, there still is a weakening in the labor force, a weakening for demand for workers. Mm-hmm. Right. And to your point, that's the piece that if it gets momentum and it keeps going, that's the recessionary dynamic. It's absolutely, if it's really just a matter of we had a bunch of workers come in, the immigrants come in a big group and it takes time to absorb them. As long as you have a strong labor market, they do get they get jobs, unemployment rate trends back down. But that does require the labor market to be in a good place.
And so the bottom line is we've had this huge influx of immigrants, right? Whether it's legal, illegal, whatever. Usually the economy can absorb them, and that is just not happening right now. And I've even read the unemployment rate amongst the immigrants is like 11% or something. And that's why she was saying it's been such a fast rise from 3.4 to 4.3 that, yes, the SOM rule is triggered, but it's like, is this time going to be different? Is it going to be the first time it fails? Or is it going to take longer for the recession to come on? Everybody, it keeps anticipating stuff. And that's what we got to know, because remember, we've talked about manufacturing being in recession for 3 years at least, right? And so service has been holding us up. So hopefully that makes sense on that. That's the full story of the SOM rule and stuff. The other one is this right here. The news dropped over the weekend that Warren Buffett had sold almost half of his Apple stock, right? And that's a big deal because obviously Warren Buffett is the biggest individual holder of it. But the other thing is he keeps selling Bank of America, like every day. I think it's like 12 to 14 days straight. Keeps selling just millions of shares at Bank of America. Now, of course, these kind of times make Warren Buffett happy, right? I mean, he dances. He's like, yeah, get down. Here we go. Let the market drop all at once, because why? And this is the other thing that's got people on the edge. Look at this dude's cash and cash equivalents pile. A record $277 billion is what Berkshire Hathaway has. I mean, look at that. That is crazy when you compare it to all those other years, right? And so he has been prepared for this handily, and so that kind of freaks the market out. If Apple's not down on Monday, I'm just going to be stunned, honestly. Let me know what you think in the comments, but I'll be stunned, okay? And remember, it was green on Friday. But of course, what is all this doing, right? Now all of a sudden, you got 100% September rate cut being priced into this, and not only 100% rate cut, almost 70%, if not higher, for a 0.50 rate cut going on. And if we try to pull up here and look at November now, you can see, and we'll kind of scroll down on this one. This one, if I do the math, is 90% for, actually, I'm sorry, no, it's 100% rate cut. 47% will be 0.75 worth of cuts by the time we get into November. All right, so now they're pricing not only rate cuts, larger rate cuts. And of course, we talked about this in wine because on Friday, here we go, right? These spreads in the yields, right? This is the 3 to 7 year bond yields versus HYG, which is junk bond. And you can see it is moving up. As I showed you, the market goes down when spreads start to increase. Okay, you have what I believe, I may get this backwards, like you see the yield curves we'll get into in a minute, basically getting so close to uninverting because the short-term yields are getting crushed, right? They're going down much faster than like the longer term yields, right, for right now. And so here's your inversion. It don't mean as soon as it crosses that zero line, things go to heck in a handbasket. That's not the way it works. But you can see how quickly it's been uninverting over the last like month or two, especially the last 30 days for sure. And when we kind of scroll back, you can see that's when things start to break, right? That's when we normally would hit a recession. You know, it can be weeks, months after it happens. I mean, move this to the weekly and you can see it even better right here. I mean, it can take a while. It can take a short time, right? And so the fact that when that does uninvert, that's when it's going to get a lot of people's attention, right? Volatility most likely will increase. SOM rules already triggered. We know manufacturing is already in recession, all that good stuff. And really, I'll show you a chart tomorrow. Hopefully I'll be back on the air or whatever. That I'll show members. And I've showed you before. It may even make more sense or makes more sense to me what I've been looking at. But we'll get into that when it comes to unemployment and stuff like that. Now, obviously, as you can see, not a whole lot of good happening right here. I mean, you got geopolitical issues are bearish, macros bearish, technicals are bearish, earnings response are bearish, and of course this is having what? Money flow, because money's flowing, right? It's coming out of big tech and all these other high beta names, and it's going into where? Defensive. Utilities, staples, healthcare is one of the places going, which I'll show you in just a second. But when you compare that, just look at that. The Qs and IWM are down between like 7%, and the Qs are down almost 4% in this time frame right here. You go to 5 days, 1 month, you can see that utilities is up, healthcare and staples are up, right? So they've been slowly trickling in, but the last 2 days, they really started buying these defensive stocks just in case, okay? Because that's, you know, it's not that these go up in a recession, but they don't fall off a cliff in a recession because these are the things you have to have, right? And so that's why they're rolling out of small caps right now, the Qs especially. And so it's just something to pay close attention to when you're looking at it. But another place they're going is where? TLT. Look at that. Look at the last 3 days TLT. Gap, gap, gap. Right? And you're not going to, unless you have just a boatload of TLT, you're not going to get rich. I mean, that's literally 5%. It looks like a lot, right? That's 5%. But it's a safe 5% because if yields are going to get cut, especially that fast, you should see any kind of ETF that holds these bonds go up. And this is the reason why you saw banks dumping the bonds they have now and going into new bonds because they're expecting these rate cuts. And so, you know, we'll see if that's going to be the case. Obviously, we've gone through this before, but we hadn't had spreads acting like this and stuff. But, you know, what did we talk about the other day? We'll talk about the indexes real quick. I said if S&P loses the shaded area, it was coming down between, 5,300, 5,340. That's where we're at right there, sitting on that moving average right there. And so it held that right there. The big question is now they're selling it down in the futures. How are we going to open up? That's what we got to find out. And so when we look at it, are they going to try to bring it back up to this area up here and then start to try to sell back down? Because, remember, right now this is a normal correction, okay? The SP, you think about it, the SP is only down like 6% right now. Everybody acts like it's down 20, but it's not. The Qs are down 10%. It actually is in correction territory now, okay? So the big if is, if this is just a normal correction, all right, then we should start moving back up, and it usually moves back up pretty dang violently, okay? But if this turns into something bigger, okay, and we still hadn't had any news coming out of Israel that I know of, or Iran, or anything else, and that's the other shoe to drop, which now is expected to Monday, they're going to strike back. We'll see if it's either priced in or, they're going to react negatively to this, okay? And so right now it's just trying to absorb, and really had a chance to price in Warren Buffett's news, right? And so we'll see if they're going to try to price that in overnight. And of course, when you look at this, I mean, I always say we got to learn something, right? And everybody, it's these rejections. The rejection off the 100 was huge. Big drop. Now we're sitting on the 100, all right? If we open up below that, what do we got to do? We got to watch to see what happens when it retests the 100 moving average. Okay, that's what we got to watch if we open below it tomorrow. And then you look at IWM, I mean, sitting right down that 50 moving average, but this was a massive drop down, 10% in 3 days right there, or 4 days, excuse me. Sitting in that golden pocket. But the big thing is the 210-ish level. Like when it tries to move up, if it, there's going to be a bounce at some point in time, there always is. But the question is it going to get rejected or not? That's the real big one. It has to get through 210, test it positively, move back up. And this was that 2024 like area I wanted to get tested a long time ago. It never retested it, right? And I wanted that. It never happened. And so we just got to watch and see if that 50 is going to be lost. And if it does, we get to watch for the retest. Okay, so again, it can drop a lot farther if they choose to do so. It's not like small cap is somewhere you want to be if there is a recession on the horizon. But remember, even when the somber triggers, all the bad news starts, I'll do a video on this for you guys. I know I've done it for members before, where you still get these run-ups, these crazy rip your face off run-ups, because the market gets super short, and of course the big money goes, yeah, right, watch this, and they end up short covering and rip your face off rally. You saw it in 2022 3 different times, right, during the crash. And this is just can be a decent correction. And in a correction, you can recover that in 1 month. Okay, so just make sure you're aware of that and stuff. But that's where we're at on IWM. And the big thing, just real quick here, is to watch the generals. Right, the leaders need to recover. Now, Apple is already green. We'll see if it opens up and the bears take charge of this by getting that RSI below 50, MACD below the 0 line, right? But you can see, so far it's above the moving average. We'll see if it breaks the 50 tomorrow. And like I say, if it ends up green tomorrow, then boy, what does that tell you, right? If that whole Warren Buffett news don't scare Apple at all, which would be crazy to me. You got Microsoft retesting the 200 right now for a bounce, so that's a big deal. And we're looking at the generals, because if the generals aren't going to turn, why would anything else turn right now? And that's really what you got to kind of look at, right? Because these are the leaders in the software and the ad spaces and e-commerce and all that stuff. Then you get to Google, this kind of in no man's land, where it's like, okay, you're looking on the weekly there, they're trying to hold that RSI above 50. You definitely won't go below 50 on the weekly for sure. You have that bearish MACD cross right there. And so again, it's below that 100 moving average right now. And so this is, definitely one to keep an eye on for sure. Then you go over here and you look at Amazon, which has been absolutely just nuked since Jeff Bezos sold billions of dollars of shares. It's actually wedged. It's actually sitting right on the 100 right there, closed above it. Got to see if it's going to break below it tomorrow. Look for the retest. 200 not too far down below that as well. You can see the bears have definitely been in charge in this one for a couple weeks now, for sure. No doubt about that. And that 200 ceiling was just set. As soon as Bezos started, I think he dumped 5.3 billion in shares right there at the 200 mark. Not sure what he's doing with it yet. And then, of course, the last two, Tesla. Tesla's breaking through this little shaded area, which was a big area of interest. It was resistance many times. It's been support many times. Going back to 2022, and so again, needs to get above that. If it opens up below it tomorrow, that will be resistance coming back up, and so a big move down on this one. And you look at NVIDIA, and it's sitting right there on this trend line right now. So we'll see if we open at it, and that goes back to January 2024 right here. So this year, and it's bounced off of it 4 different times. So we're going to see, right? Because it bounced off it just the other day when it did that major rally. So we'll see if we're going to get another bounce on this right here. If not, then again, you still got the bottom of that channel, the last shaded gray area I have down there for support. We'll see. I already said buyers would definitely between 95 and 100. They showed up pretty dang quick. So we'll see if that's going to be the case this time. But, if NVIDIA ain't turning, is AMD really going to turn? Is Taiwan Semiconductor going to turn? I don't think so. So that's why I'm showing these right here. And you can see also that 100 moving average is sitting right there on that trend line as well. So that's a big thing right there. Now, when you're talking about earnings this week, we got a boatload of earnings this week. And it's going to be a lot of high beta stuff, especially. You can see on Monday, they're going to end up Palantir, Hims and Hers, Clover, Lucid, some others reporting right there, Reality Income. Then on Tuesday, you have Uber, Celsius, Fubo, Caterpillar. That night, Supermicro, Rivian, Airbnb, Wynn, Devon, Reddit. Wednesday, more. Shopify, Walt Disney, CVS, and then you're got Lyft down there at the bottom. Then that night you'll have Robinhood, and I don't really see Oxy. There's one of Warren Buffett's favorite, Oxy right there. He always buys that. I believe it's like 55 or below. Then on Thursday you got Lilly, and then Datadog, which we'll find out about maybe a little bit about CrowdStrike. And then you have Elf and Unity reporting that night. Trade Desk, another big one. You got CleanSpark, the cryptocurrency stock, and then some really high flyers here. You got Canopy Growth and Nikola, which is still in business, believe it or not. And then Red Folder News is definitely going to be lighter this week, but you will have 2 different bond auctions to watch out for. That's for sure, with the yields doing what they're doing. But Monday, you'll have Final Services PMI, ISM Services PMI after the bell opens on Monday. Tuesday, nothing to worry about. Wednesday, you're going to end up with crude oil inventories, 10-year bond auction at 1 o'clock, consumer credit month over month. Thursday, unemployment claims, mortgage delinquencies, 30-year bond auction on Thursday. That's going to be a big one. And Friday, nothing. And so it's definitely going to make for an interesting, volatile week for sure. And we'll see, of course, if we get any news out of Iran striking Israel and all that fun stuff. And we'll just have to look and see how Apple and the rest of the stock market is taking what Warren Buffett's actually doing. So hope you guys got some out of it. Please hit that like and subscribe button on your way out. And I'll see you guys tomorrow, hopefully.